Hi guys, welcome back to another video. The most exciting thing that has happened so far this week is the movement that we have seen in gold. Now, I don't trade gold that often. I used to. I've kind of put it on the sidelines, but this week I've been watching it really closely, and some super interesting things have happened. So we're going to go over that, what I've learned, and what potentially we could do to make some money from it as we move further into this week, and especially as we move later into the year. So, as you can see, here we have the daily chart, and we have these three buy areas, which I pointed out in my previous video 2 days prior, doing that breakdown of charts for the upcoming week. All of that to say, our first area was hit, which was this 38 fib from this area. It was a really strong key level with these touches all over here. Major weekly trend line retest, and those were the main confluences. So we'll start out with that area. I had my pending set, but we have to drop all the way down to the 15-minute chart in order for you to see what happened. As you can see with this 15-minute candle, we came really close to my buy area here, which was at 1834. We moved about 500 pips, and then we dropped. Now this drop came from some news that we will of course go over, but I left my pending because the zone was so strong that I thought that potentially it was going to be worth the additional risk. And as you can see, I got stopped out, which is totally fine because a setup like this, I was willing to take that risk. But I know a few traders had their pending slightly higher and profited, so that was good. If we drop down, we had this 50 fib area, which I did not take. I pointed out in the previous video that it wasn't as strong of an area. Yes, we had the 50 fib and a little bit of a key level, but there was nothing else there. So then we dropped around 2 p.m. Eastern time. We dropped to the 61. Now, at this point, gold had already dropped 2% for the day. So I was really expecting some kind of strong profit-taking movement. Ideally, the area would have hit at least a couple of hours sooner when there was more volume in the market, but it didn't. So the daily candle closed with this 4-hour bearish candle, and then from 5 p.m. to 9 p.m. Eastern time, we got this small bullish reaction, which did about 500 pips. So 700 depending on where you got in. So a few traders did make money from that. I, however, closed it at break even. Now, this movement is really surprising, to be honest with you. I was expecting a larger bounce from the 38, and then of course the 61, which was an incredibly strong area. This is the 4-hour. You can see it was a 61 fib, 800, 200 EMA, 1800, huge key level, round number, and then there were moving averages on the daily as well. So very surprising that we have broken through this, but really the reason for it is, in my eyes, twofold. First off, we have the fact that we are Tuesday, so on Monday we had Joe Biden select Jerome Powell to remain the chair of the Federal Reserve. Now this was priced in about 70%, so it wasn't massive news, but really the market didn't love it because some people were hoping that the vice chairman would be appointed to be the head of the Federal Reserve, and of course I can't remember his name, but he is more dovish than Jerome Powell, and of course markets like that. So he would be a little bit more hesitant to increase rates, and he would pump a little bit more money into the system if he had it his way. So Jerome Powell is reappointed, and that is the major news that led to this drop. So a stronger US dollar as a result, which we will take a quick look at here. So the 4-hour, and as you can see, we broke out from this resistance zone at 96.0. So super interesting. If you didn't connect the dots to the fundamental news, I think it's really important that you take this as an example and you use it for future trades, especially because, well, one, it's a good learning lesson, but two, it could have potentially helped you navigate this trade. Some of you took that 50 fib buy, you weren't aware of the news, and really there was no reason to take that 50 fib area. The 38 was worth taking, in my opinion, even again with that price action. And then the 61 was worth it for, 50 pips or so, but you could have seen that news, and with that price action you would have adjusted your profit levels to have gone for a smaller profit target than a massive one. So super interesting. If we look at the DXY, this is really a result of the fact that the market is viewing Powell as being a little bit more hawkish, and also the fact that interest rate hikes are on the way. And the last thing that I want to go over, which I think you guys are very interested in, is the famous so-called December bull run in gold. Now, every currency pair, every commodity index for the matter, has its own seasonal pattern. And gold, the most well-known one that I'm aware of, is that it is very bullish in December. There's a few different reasons for that. I'm not going to go into it in this video. I think that combining that seasonality and the fact that it is so well known and connecting that to this price action is incredibly valuable. If we are saying to ourselves that we are moving into late November, December's coming up, we want to buy gold as we move into the end of the year. So many retail traders are thinking that way. And because Forex is a zero-sum game, for every person that wins $100, every person has to lose $100, institutions may not have enough liquidity in order to take gold where they want it to. What has to happen? There needs to be enough stop orders fulfilled in order for price to move higher. Because so many retail traders, myself included, were taking buys at the 38, the 50, the 61, even 1785, all of these traders, for the most part, have gotten stopped out. What does that allow institutions and banks to do? It allows them to actually put in a massive amount of buy orders, which before would not have been able to be fulfilled because of all of the buyers in the market. There are now way less buyers, retail traders have gotten stopped out, and now I bet we're going to end the year by saying, wow, what a crazy bull run. I wish I had gotten into it. So I do think that there is still a strong potential for there to be a bull run. What I'm trying to say is that it's so important to think like banks and institutions and how they're trying to position themselves. You don't want to think like a retail trader. You want to think like a large market mover. And this is one of the best examples that I have seen in a long time. All retail traders are thinking the exact same thing. I'm going to buy gold in December and I'm going to make a ton of money. And so the market is going to react and respond to that in accordance to what the market movers actually want to do, and that is probably to move gold higher. So now that everybody has gotten stopped out, I think that the bullish bias will remain. So that leads us to the question of where can we buy? Our next major support level is right over here. So we need to keep an eye out on that. This is going to be around 1760. If we draw a fib from here, that will somewhat coincide with our 61. So I will be doing a video breakdown in the near future to look at the major levels for gold that we need to watch for the remainder of the year. This 61 is interesting. We'll see how this moving average moves in line with it, but I don't think it will. The weekly close will be really, really critical to watch as we bounce off of these weekly moving averages. But that is what's happened so far in gold. We've had this major drop driven by fundamentals and also driven by how retail traders have positioned themselves and how traders are thinking about what's going to happen for the end of the year. So I hope that makes sense to you guys. I hope this has been valuable. It took me a long time to learn this and try and shift my thinking, and I'm still learning. I lost on that 38 fib. Fortunately, I didn't lose on this 61, but it's really, if you take one lesson away from this video, it is that you need to shift your mindset into how banks and institutions trade, and of course you need to stay on top of headline news because that could have saved you a little bit here. I hope you guys got value from it. If you're still here, you have my gratitude. Lots more videos on the way. I hope you're doing well, and I'll see you in the next video. Peace.